This webinar is proudly brought to you by IG South Africa. Visit igmarkets.co.za to open your trading account today.
Hello everyone, my name is Warren Peacock from the Traders Place. Today we're going to be having a look at double bottoms and double tops. We've done something a little bit different. We're going to draw the lines in as one would see them while they develop on these patterns. We'll start off with some basic rules and then we'll move across to the charts. Basic structure of a double bottom. The price forms a valley after a downtrend. It then moves to create a peak before falling a second time to find support at or near the previous valley. The double bottom is confirmed once the price breaks above the peak between the two valleys. There are two types of valley, a sharp valley and a shallow valley. We'll have a look as we get to the charts. Please note that this is a bullish ending pattern, so we require the downtrend first. Double bottom forms, then that would be considered bullish and the potential end of a downtrend. How do we trade these? Using leverage, CFDs or single stock futures. When the second valley begins to break initial resistance, the stochastic 10 period should be ticking up for a classic buy signal. This can trigger an early long, especially when we're trading with leverage. We'd like to get in a little bit early, and you can then trade so long as there is enough potential to make it worth the risk. Your stop loss would be the low of the double bottom, wick or body. If the wick is ridiculously long, we're not going to use that. Then we'll just use either one of the short wicks or the body of the candles that formed the double bottom. Target number one would be the peak between the valleys. Again, you just have to measure, make sure that there's enough in it. Target number two is a breakout extension, which is 1 times the distance between the double bottom and the peak between them. In other words, if the peak level is broken, we then look to take 1 times the distance between that double bottom and the peak as target number 2. Basic structure of a double top. Price peaks after an uptrend, forms a valley before peaking a second time to find resistance at or near the previous peak. The double bottom is confirmed once price breaks below the valley. Again, there are two types of peak, a sharp peak and a shallow peak. This is a bearish ending pattern. In other words, it requires an uptrend to be a valid double top. Once the neckline breaks, we can then consider the uptrend complete and we'll be looking for a move lower. Rules for trading the double tops using leverage. When the second peak begins to break initial support, the 10 period stochastic should be ticking down for a classic sell signal, and this can trigger an early short trade so long as there is enough potential to make it worth the risk. And basically that would be the stop loss at the high of the double top, wick or body. Again, if it's a big wick, ignore it. And the difference between that stop loss and the bottom of the valley would be how we calculate the risk. Once the price breaks that valley, then the extension again is 1 times the distance between the double top and the valley between them. Here are my contact details. You can get hold of me either on that cell phone number or via email, warren@thetradersplace.co.za. And you're welcome to go onto my website and just subscribe for the free TA daily report. Let's go and have a look at those charts and draw some pictures. Alright, we'll start off with Endplates. We had a good downtrend, a little bit of an Elliott wave pattern, 1, 2, 3, and then 5 down here. The market came up, pulled back, and we can see that there's support, but always draw your lines in. And I'm going to use the classic candle zone, the body low and the wick low on the left hand valley, and then I'm going to draw a resistance line on the clear neckline over there. We consider the pattern valid once the neckline breaks. If we put on a stochastic over here, we will see, and we just make sure that it's a 10 period stochastic for shorter term stuff. We can see that the stochastic actually ticked up well before we got the breakout. So this can give us an early entry into the trade, and we could have entered somewhere in this area. Okay, we can measure the distance from 292 Rand over there to the neckline is 328 Rand. That's a pretty decent move on leverage. We then consider the trade viable. If you had been patient, you could have actually caught it a bit lower, but you know, that would have been a pretty decent trade over there. You would have been happy to have a trade there. The stop loss would have been a break below the lows, and in this case the wicks were reasonably small, and should price have broken below 271, then we would have stopped out on the trade. The distance, once price broke the neckline, we can see it was, you know, one day it stopped there, the next day it closed above. We then consider that a breakout, and if we're already long, we can hold on to that position and leave it to run a bit further. If you weren't in yet, you could now enter the trade. Especially physicals guys would be waiting for the neckline to break, and then simply we just measure the distance from the neckline to the support area, and we would have had a target for this trade at 384.55. And as time went by, Endplates started to tick up. It hit the target, and you could have taken half your position there. It did break the target high. Close off 50% of the trade if it's big enough, of course. Make sure that your cost doesn't destroy the profit. Essentially, the market continued to move higher and higher and higher, and this is why bullish signals are probably the better thing to trade. The market always wants to go up, so we're always looking to get into the trend, and this is just one way. We get an early entry down at the bottom, we then get a second entry or just a hold over there. If it breaks through 1 times, we can simply move our target to double and use a trailing stop loss. There it kicked up to 440, it broke through, it started coming back, time went by, broke through that support level, we'd used historical resistance, and we could have exited the trade at 420 quite easily, and we would have had a pretty decent return on Endplates. The next one would be Mr. Price as a double top, and again, always draw your lines in. Visually it can be quite difficult to just, you know, say okay, it's a double top. We have to draw the lines, make sure that the zone is reasonable. We can see again that the 10 period stochastic has ticked down. The market broke through that little support area over there. That can be an early entry for leverage trades, and the target would have been, you know, between the entry at around 142. Target number 1 would have been 131. So that's an 11 Rand move on Mr. Price, so about 8%. Pretty decent trade on leverage. And again, if you were holding physicals, you'd probably wait for that neckline to have been broken at 131 before you made an exit on any physical trade. There's the neckline drawn in. For those of you that were entering late, either you've taken 50% of your profit over here at 131, or you entering late. And remember what I said earlier, shorts are higher risk, so we don't want to do that with a normal full position. We'd probably take a smaller trade. Again, the target would be the distance of the double top to the neckline, extended 1 time, so 115 Rand on Mr. Price would have been the downside target. As we move through time, Mr. Price started to retrace. The stop loss would have been again the neckline over here for those of you that would have entered late. Never reached there. Eventually touched 115. You would have been quite lucky to get out there. You might have had an order in to get filled. And again, we had to be patient. And eventually it broke through 115. Now, personally, I would very seldom extend a short to double the size of the double top. I'd rather just trade for the 1 times. That's a really good move. It's about 19%, 18%. I think that's pretty, complete. You can see then from that area Mr. Price actually moved higher, and right now it's above the old highs. and we can see it's broken through that 145 level and continued up. So shorts, please be careful, take your profits and move on. MTN was building a double top. Put in our resistance level over there, we put in a second one on the wick. These wicks are pretty long, so I would just ignore them initially. That wick there is substantial. It keeps the zone down to a nice reasonable level. Neckline would have been down here. In this picture we can see the stochastic has ticked down below 80. We could have had a little trend line drawn in there. Confirmation would be the price breaking lower, which it did at 193. If you had entered early, you would be short now on MTN with a stop loss just above the 200 level. As we move forward, we can see MTN didn't follow through on its potential and would have stopped you out. So somewhere at 193 you would have been short, just above 200 you would have been stopped out. Again, it was a double top. We don't want to take massive positions for shorts, and you should also calculate your stop loss on a risk reward basis. The last one we're going to have a look at is Woolies forming a double bottom. What I wanted to point out in Woolies is we have a very small downtrend. That's 1, 2, 3, 4, 5 candles long. This is a weekly chart, so that's 5 weeks of dropping. That is ample for a downtrend. Drawing my support level on the body and on a wick. Now we can see that that wick is quite big. I would consider just moving it up to that one. We have a neckline. Again, this is a long trade. Here's our neckline. Price is closed above the neckline. I just use the bodies on this neckline, so on that peak in between the two troughs. Just use the bodies. Closes above that, we have a breakout. The stochastic here didn't confirm the trade. Didn't confirm. That second low wasn't good enough, so there was no early entry. And we can see that the price range is quite small as well, from 60 Rand over there to the neckline, which is 67 Rand. No confirmation from stochastic, no trade or no early entry. We go long on the breakouts. The next day it opens, we go long somewhere around 68 Rand 60, and Woolies has continued slightly higher and is now consolidating around the 74 Rand level. I would simply trail my stop loss. This is a clear support level. Trail my stop loss to there. Should Woolies break below that 72 Rand 40, I would consider exiting that late long entry. Well, thank you very much for spending your time with me. Please feel free to contact me should you have any questions with regard to this presentation. And yeah, good luck. You're welcome to contact me if you have any questions. Thank you and bye-bye.
This webinar was proudly brought to you by IG South Africa. Visit igmarkets.co.za to open your trading account today.